And just like that, we are live for this week's episode of Hard Money Monday. So excited to have Chris joining me. I actually remember the first time I met Chris, it was at Radiant Men's Business Group, which is kind of funny. It says a lot about our relationship because that's pretty much like real estate and God is most of what we talk about, man. And of course, we're also both in James Lascara's Elite Investor Mindset Group, and we just did a deal together last week. So we got a whole bunch of stuff to talk about. And I just made sure that I'm live on Instagram now. So we're good to go there. So anyways, man, I want to kick it off because when I first met you, really your thing was the whole hedge funds. Like you were deep into that space. Probably correct me on this time frame, but it was like maybe around starting like 2019, really into 2020, 2021, that hedge funds got into the investment space. And I guess tell me how you got into that, what your involvement was like, and we can talk about lessons learned there as well.
Yeah, I appreciate it. Yeah, first off, thank you so much for having me on. Looking forward to the conversation. And so started in real estate 2016, actually in the hedge fund world. Hedge funds have actually been buying since 2010.
Oh, so I was just dead wrong. Okay,
Yeah,
got it.
that's all good. Most people didn't know it wasn't as public as it was. Like Colony, for example, they raised a bunch of money and deployed like 50 million plus. Like they didn't even do any research or didn't do much underwriting. Just dropped it all in. And now they look like geniuses,
Jeez.
right? So like that was like the beginning when they saw this could be a good asset class for like really great investments.
Which
But
hedge which hedge fund was that?
that was Colony.
Colony. Okay.
Hmm.
I don't know
Yeah.
any of the hedge fund names, to be
There's
honest.
like Colony, there's Prettium, there's American Home for Rent, First Key, Invitation Homes, Blackstone,
Yep.
BlackRock, and there's a bunch. There's a bunch, right, that have now since came on since they see that they made this a viable vehicle,
Sure.
right? So
Okay.
I got started in 2016 with a small brokerage, and all we did was underwrite deals and buy properties, single family homes for their rental portfolio. At the time, I think they owned like 30,000 homes nationwide. I was with them for about 6.5 years. By the time we were done, we didn't help them buy all this many homes, but they owned like about 90,000 doors. Within that time period, they increased quite a bit, right? So a lot of underwriting. I probably underwrote 8,000 single family homes for rentals. Um,
Dang, dude.
yeah, all within like Tampa, Orlando, Jacksonville, Atlanta, all throughout the area, about 14 different markets. So a lot of visibility to properties and single family home rentals. So
That's
very
crazy,
valuable.
man. So after underwriting literally 8,000 properties approximately, what
Hmm.
are some of your biggest takeaways for like instant green flags, instant red flags when you're kind of diving into a single family house in Florida?
So the couple big things was they had a very specific model what they ran, have a very crystal clear criteria. They knew exactly what their buy box was. They didn't stray from it at all. Like one example was the age of the home, 1980 and newer. If it was
Mhm.
1979, didn't even look at it, even though it was
Wow.
a great house right next door to a bunch of properties they owned. So they were very clear on what their criteria was. So if it strayed a little bit, they wouldn't even look at it, just move on from it, right? So that
Wow.
was huge, just having that criteria, just follow it. It makes it kind of simple. You just look at, if it doesn't fall within it, you move on from it. If it does, then you kind of proceed to the next steps. That was huge. The other thing that even I think most investors and owners of homes don't really underwrite properly is the taxes. They
Mm,
understood, they got it kind of, when they were first started buying, they weren't underwriting taxes properly. Then they
hmm.
kind of got hurt when all of them got reassessed after the
Yeah.
first year of like free taxes or cheap taxes. So they came up with a good formula to project what the future tax bill will be, which
Hmm.
helps them save in long term. It's not 100% accurate, but it's pretty close, within a couple $100. So it allowed for that cash on cash return and those cap rates to actually hit better versus when
Sure.
they get reassessed, which a lot of people forget or don't know about doing.
Yeah, I wanted to circle back on two things with the property taxes, but before, I just want to say it louder for the folks in the back. What I heard on the buy box was, "Hey, look, this organization was able to scale from X stores to, how many thousands and thousands of properties. And guess what? They set their buy box. And if a deal strayed even a little bit, they didn't get emotional. They didn't try to make it work. They just said, nope, this isn't our buy box. We're done. We're moving on. And when I think about some of the best investors I know, granted, like you can be a little bit more flexible, right, as an individual, right? And the numbers do speak pretty loudly on projected profits, especially if you're not keeping it as a rental. But for the most part, man, it doesn't fit your buy box. That's it. You're done. You move on. One of the number one mistakes I see from new people is they don't have a buy box. They talk to me, say, dude, write down your buy box. Write down the zip codes you like. Write down what you're looking for. And then a week later, they send me something totally out of their buy box. I'm like, you're not spending time on this. Like, take this somewhere else.
Yeah. Yeah. And to that point, we get all these text messages from wholesalers and investors that are looking for a good deal. What's a good deal? A good deal to you might be totally different what a good deal to someone else. So like when people like reach out to me as an agent, like, hey, find me a good deal. Well, then I say, what's your buy box? And people don't even know, like, what do you mean by buy box? Just that question, like, I'm not going to waste my time with this person.
Dude, yeah, 100%, man. That's just like step one of one. If you want to get into real estate, that is the very first thing. You need to determine your why. Once you have your why, then you can determine your buy box, right? And then once you have your buy box, you can actually start doing things like, hey, I should get my LLC set up, my EIN, my business bank account. So I'm like ready to go and talk to an agent. But if you don't do steps 1 and 2, man, you're just simply setting yourself up to fail. And amazingly, that is a lot of people. And even more impressively, a lot of agents don't think to be like, hey, look, I'd love to work with you, but first do these things. They're like, a new potential client. Let's look at houses. I want to do 8 open houses this Saturday.
And then as an agent or as an investor, you have no direction. Like, where do you go? There's a million different ways. Like real estate's unlimited, right? So many different verticals you can go into. If with no direction, like where do you begin? So you have to have some type of direction. And that really starts with that buy box.
Yeah, 100%, man. Okay, let's bring this back to the property tax discussion. One, because I have a couple of questions. Really, that's the main reason. Okay, so question number 1. I'm not sure if you're familiar with this or not. You probably know Derek Carrillo, right?
Name sounds familiar, yeah.
Yeah. He hangs out at a lot of local meetups, etc. Local attorney. Anyhow, so this was like 6 months ago. He's telling me all about how in a Miami court, they were like, and actually, let me give some preface. So if you own a property in an LLC, okay, so homestead, your property taxes go up the least, right? That's like the best homesteaded properties. Okay. Then after that, it's like if you don't have a homesteaded property and it's a primary, property taxes can just be reassessed like every year, right? And there's not like a limit, at least
10%.
Up to 10%.
Yeah.
Okay. And then what I was told is that LLCs also had a limit. Maybe it's at 10% increase as well. But then because of a Miami court district ruling, supposedly those LLC limits like are no longer a thing in Florida. So his big thing was like, dude, get your stuff in a land trust because then you're protected by the limits again. But at least as far as I'm concerned, and I'm really curious to see once we start getting those property tax reassessments, because that happens in the spring usually, right?
Well, it happens January 1, and then it gets, in Florida at least, the trim notices come out in November. Well, trim notices come out in August, and then the real bill comes out in November. But you can apply for your homestead if you're primary residence. You apply for that before March 1st.
Got it. Okay. So we should be seeing these things come into place soon. I'm curious if people in LLCs are actually going to get like, hurt by this property tax situation. But yeah, one thing I was curious if you were familiar with, it sounds like not a point of expertise for you, but I do know that you talked about this underwriting kind of formula to predict where property taxes are going. Is that something that's confidential information? Is it something you're able to share? Is it complicated? Is it simple?
It's very simple, and I could share it with your followers and everything too. But I don't have it pulled up right now. I wasn't expecting to have it pulled up. But honestly, it's very simple. You just take the just market value, do a little bit of math on it, and it's a cell in a couple, like maybe 5 cells in an Excel spreadsheet. It's very simple to do, and it'll spit out a close estimate what they're going to be next year, or when it gets reassessed, I should say. Another
Gotcha.
way that's a little bit more accurate is every county has a tax estimator tool.
Yeah,
They
I was
give
gonna
you a
ask.
range. Yeah, they give you a range between, I call it 5,000 and 6,500 bucks, right? If you use that, always go to the high side so that if it comes in lower, like you're winning, right? So I always suggest, even on primary residences, just always use that, because my early career in real estate, I helped out a buyer. They love this house. The current owner, they owned it for 30 years. Tax bill is 800 bucks a year, right? Pretty much free.
Let's go.
Yeah, they were like, "Oh, my payment's great," but then it got reassessed after a year and a half, because when they bought it, and now their tax bill was like $3,000. So their bill went up like 200 bucks a month. They're like, "Why did it go up 200 bucks a month?" All because of the taxes. They didn't yell at me, but they just wanted some more understanding. And ever since that, I've always educate people on that reassessment. If they want their bill to be 2,000 bucks a month, we can get it for the first year, but the real bill was going to be 22 or
Right.
2,300. I've
Right.
actually lost deals for buyers because of that. And just
No
being,
kidding.
I want to be upfront with them so that they're not
Yeah.
surprised. A lot of people get surprised, especially buying new construction. They're only getting based off the land value, and when it gets
Oh,
reassessed, they get
dang.
hit with 5, 7, $8,000 in taxes. They're not prepared for it. So I really try to educate my buyers on that tax reassessment. It's really huge. A lot of people either don't know about it or just think, oh, it's not going to be that big a deal. So it really depends on
Wow.
how long the previous owner has owned the property, what it's being assessed for at that time. So there's a lot of nuance that kind of goes into that.
Yeah, that's interesting. My immediate thought on that is, in particular in Florida, I was like, dude, if I was a new agent that didn't really care about the long-term relationship, because one of the things about being on the retail side is you'll likely only work with one client a few times ever, right? Maybe only
Mhm.
once. Probably only once for most people, right?
For most, I got a couple repeats now, which is nice. So,
Right. But it's like, dude, wow, you could sell somebody on something and kind of not really tell them about the property taxes, and
mhm,
might be a full year or more before you realize kind of the situation that you got them into. It's like,
mhm.
man, I mean, good on you to risk losing business, or probably actually losing business, just because you're trying to give people, like, actually do your fiduciary responsibility as an agent,
It's
which
really
I love.
important. If you close a property in the Q1 of a year, your taxes won't get reassessed till like almost 2 years ago, like 2 years in the future. So like,
Yeah.
you get comfortable with that $1,800 payment, and then now the real payment is 24. You're not experienced. You're not ready for that. So, yeah, it's very, very important.
Theoretically, just asking if this is like a little hack. Like, okay, we're in Q4 right now, actually almost the end of the year. So if you're buying a place as a primary residence, like, let's just say you're representing me, I'm going to buy this house. And I know the dude has owned it for like 30 years. I'm just like, yo, Chris, can I technically buy myself like a whole year of stuff not getting reassessed if we just close this in January rather than December?
Yep. So I would wait till mid-January, just not January 1 is when they all get reassessed. And then
Ooh,
it'll get reassessed January 1 of 2026. And then the bill will come out November of 2026. So like
wow.
you'll have a pretty much a year and some change.
Dude, so that's like a hack to basically save, I don't know, 5 to 10 grand potentially.
It depends on the situation. There's always
Right.
nuance to real estate, right? It's never
Right.
black and white. There's always a lot of nuance. I'll probably say that a lot today, but there's there's always nuances. People don't want to go into that, but yeah, it is a way. So
It's
your first
interesting.
year, cash on cash returns, your cap rate is going to look great, right? But when they
Yeah.
get reassessed, that's when the real cap rate comes into play. You have to kind of be ready for that on
Right.
the
Right.
rental side. On the flip side, you're only holding it for 3, maybe 6 months, depending on what you're doing. So you don't really feel it that much.
Yeah. I guess if you're flipping, you're really just paying the old property tax and then you're out of the
Mhm.
deal, right?
Yeah.
Hmm.
Depending on when you acquire the property, there could, again, nuance, depending on when you're buying the property and everything. But yeah,
We're not using blanket statements today. Got it.
no.
All right. So I did actually have a couple of questions that came in from Instagram, and then I was looking for them while I was being rude and not looking at you while you're speaking, I was looking for these questions and they expired.
Oh no.
Story expired. So we don't have the audience questions. If you guys are watching live, you're welcome to drop any comments. And we'll go over them because we are diving into a lot of stuff that like I didn't know a lot of this stuff, and I would like to say that I'm fairly experienced at this point. But I do want to transition and talk about the deal that you just funded. And in particular, I always like talking to people who don't flip a lot and um like why this deal, right? Because that's me. I don't try to flip a lot, but if the right deal comes up, the right situation, and I love
Mhm.
everything about it, like, yeah, dude, I'm gonna send it. So starting off, just tell us where this property is.
So this property is in Pinellas Park, a great area. Pinellas Park, right down the street from there, the big not convention center, but park where they do a lot of events.
Mhm.
So it's actually in a really good location.
Nice. Okay, how'd you find it?
So I'm a part of a marriage group. My wife and I are for church, and one of the gentlemen, the GC, and his aunt or cousin had this property, and he's like, "Hey, come take a look at it. She needs to sell this thing quick. I just want to see what you can offer her." So I met with
Mhm.
her, and I gave her two options. I was just being honest with her, like, "Hey, we can go in the market now at X price, or I can buy it from you at Y price." And what was motivating to her was she was represented as a power of attorney for her aunt actually, and they needed the money quick in order to provide housing for her. So her thing was like time. Just get this thing sold as quick as possible. The highest value wasn't as important to her. Time
Yeah.
was important. So I just was be as an agent, I want to do what's best with her. I told her we can
Yeah.
go on the market, we'll list at a much higher price, we'll have to deal with showings, repairs, et cetera, or we're going to buy at a much lower discounted price so that I can take on that risk and put it back, get it back into living condition and then put it back on the market.
Yeah, 100%. So if I'm hearing you correctly, if you go to church groups regularly, God blesses you with amazing deals.
Well, whatever God wants, we're going to steward it. I don't think it's an if then situation. This one just
I'm
happened to
just
be.
I'm just messing. I always love to
I
throw
know.
some prosperity gospel out there so I can get attacked on social media.
Yeah, yeah.
Um, I will say though, one of the green flags for a deal that doesn't necessarily show up on paper is where the deal comes from matters a lot to me personally. Like if I know the person and I've gotten in on a deal, like I'm tight with this person or it's that kind of connection, automatically in my mind, it just registers as so much less risk. Um, just like having the inside track on the relationship, because really, at least a third of problems with deals come from four people involved, wholesaler X. And by the way, this is the dispo manager and a different acquisition agent locked it up. And there's like five strings of communication. It's having direct shot right on a deal that you're not competing for or like getting pressured to get in a high offer at a certain amount of time, which by the way, wholesalers love to do. And honestly, it drives me crazy. Like the pressure to submit offers rapidly with zero inspection period. It's like, no, dude, like I'm not doing that. Um, so yeah, I love that. What else
And
about the deal?
there's some built-in trust with that too, right?
Yes.
So which is huge in real estate. There's built like the trust factor is massive in our industry because there's a lot of shady dealings that happen.
Yeah.
So having a little bit of built-in trust really does help that process. And again, like my
100%.
fiduciary is for that client at the time, because I kind of in a unique situation. I can do both. We can list it, or I can present it to investors, or I can buy it myself. So I can give you three different options, whatever was
Right.
going to be best for your situation. So that's like I look at it what's going to be best for them, and if I get to benefit from it on either side of it, like great. But my goal is to do what's best for the client, whoever I'm dealing with, buyer and or seller.
Yeah. Well, I think that's awesome, man. And this is an instance in like the way you're presenting it where I'm like 100%. This is like, if you were to wholesale it, I would say good on you, man. Like, awesome. This is exactly that situation where you can come in and say, lowest offer is me buying this personally. I don't flip a lot, but I want to help you out. If you want to know who your buyer is, fantastic.
Hmm.
Number two, you still want that speed, but maybe you want a little bit more. Hey, let me bring this to my network of buyers and I'll see if I'm able to assign them this purchase contract, we don't have to list it. It's going to be really fast. It's going to be very private. Or option number 3, like, let's just throw this thing on the MLS.
Mm-hmm.
Example of really like that's ethical wholesale deal right there. If you were to do it and you didn't, and so
I
I
thought
guess
about it.
right. So my
Yeah.
question is, why not just sling that assignment around, and why go in and decide to flip a property when it's not like the main focus of your business? Why this deal?
So it was a great opportunity that came, and I felt like I want to do more flips, and I feel like God presented this great opportunity for us. I really like to get into the development game, and this is a step to get into that game, right? Learning how to project manage, learning how to underwrite a deal properly, going through, making sure all the dollars are accounted for during the renovation. My wife's been
Sure.
a great asset behind the scenes, making sure like I really think of things. So a big shout out to Katie. She's been awesome with this process already. But it's a good learning experience. Obviously, there's going to be some financial gain on it, but really,
Right.
just the intangibles of learning the process will help
Yeah.
grow to where I want to be as well. And like I said, I'm just trying to steward the opportunities we have, and this one kind of fell in our lap, but we're just going to take advantage of it.
Yeah.
And I want to do more of these. So this is a good like starting to kind of build on what the future will bring.
Yeah, 100%, man. I think there's a lot to be said for that. I know my first time flipping, I made a lot of mistakes and I rushed it. But one of the things I really didn't have an understanding of was determining a proper scope for renovation, but then also understanding cost, both labor and material.
Hmm.
And really, the only way you get good at that is by doing it a few times. You learn really quick when you get like financially slapped for making mistakes. Like you're an A student every time.
Yeah.
But it's like, man, you don't even know if you're getting a reasonable quote. You don't know what reasonable timelines are. You don't know anything about any of that stuff. So like I procured the vast majority of stuff on my flip, right? So I learned about pricing of everything. I shopped everything around like crazy because I was already losing money. So I was like, I'm not losing any more money than I have to.
Yeah. Yeah.
Learned a lot about labor costs, learned a lot about like, dude, when you go in a flip, it's pretty tough to leave stuff behind. You have to be very careful about one of the common traps when you walk a property. It's like, oh, that'll be fine. Oh, that'll be fine. And then you get into it and you're like, oh my gosh, dude, now that like we kind of pulled back the layers, like everything has to go. That's what happened to me. So I am curious. Now, you kind of had two choices with the Reno on this one because the property is nearly livable, right? Almost 4-point ready.
It's pretty much 4-point ready. Yeah.
Yeah, basically 4-point ready. So for anybody listening, 4 points are a really big deal in Florida because if you want that retail buyer who is probably going to pay the highest because it's not an investment to them, it's basically a lifestyle expense, right? They're willing to pay to live there. They can't get money from a bank if it's not going to pass a 4-point, right? So that's really important. So you kind of had the option A, just make sure it's 4-point ready, clean, put it on the MLS, sell it to a retail buyer. And the spectrum was like all the way over here, do a full reno, make this thing awesome and sell it for max price. So where are you at on that spectrum and why did you land there?
We're pretty much like a little bit towards the middle of that spectrum. We're going to put some flooring in, some paint. There's some drywall repairs that need to be done in the garage. We've actually even floated the idea of converting the garage into a third bedroom. So it'd be a maybe a 3-1 or a 3-2. But the time of that was going to take. I thought that time value of money was just to do it as quick as possible, and so that we can maybe redeploy that capital into something else. So the thought was to, and we're not going to touch the kitchen, we're not going to touch the bathroom. Well, I lied. We're gonna put a new vanity in for $250. Like update the accoutrements in it, like make it kind of pop a little bit so it looks new. Put some fans in, paint the exterior. We had to remove a shed. There's some minor things that we're doing, but when I was doing the underwriting, I was like, I could spend 25 grand and make roughly 30, 35 in profit, or I can spend 60 grand and make 30, 35 grand in profit. So like, and the time of that would have been exponentially longer, right? So the speed of money, right? If we could turn that capital over 2, 3, maybe 4 times in the year, that just makes sense to kind of do that. So ultimately, it made sense to kind of have a little bit better speed of money. just
Yeah.
do maybe a month, maybe 5 weeks of renovations just to make it good. We're kind of coming up to the holidays too, so I don't want to put it on the market in December 20th, right? Because I'm gonna lose a week with holidays being on
Yeah.
a Wednesday, with Christmas being on a Wednesday. I'm gonna lose a week right there, right? So like it makes sense just to put it on mid-January, where buyers are out of their Christmas comas, right? So
Yeah.
that way they can start ready to buy. And at this price point, we're going to be under 300. It's going to be a great property for a
Whoa,
VA
dude.
buyer, for a FHA buyer, first-time home buyers. Like it's going to be a really great property for them. So and I have a heart for the missing middle. So like this would
Yeah.
really kind of really hit that point too. So I'm
Yeah.
really excited for this one.
I love that, man. I love that your mentality is you're thinking about your annualized return, which it's crazy to me how many people ignore that.
Hmm.
Um, because to your point, in Pinellas Park especially is horrible for pulling permits because one of the comps that we used was another one of my borrowers' deals, and I think they added a bathroom
Hmm.
that held their project up for 3 or 4 months. So while they did end up making more, they were like, dude, we spent an extra 3 to 4 months on interest payments. And how many great deals were we not able to do because we were tied up just sitting around waiting for permits on that?
Yeah.
So if we want to go back to buy box, a lot of people are like, no, existing permits only. And existing permits means something's already there. It needs to be replaced. Typically, this is HVAC, roof, maybe windows, stuff like that. You can get, boom, like same day approval. You want to do something new, add livable square footage, all of this stuff, you can get higher returns. But these are the type of flips that people get into that last a year or a year and a half. And even if they make money, it's like, dude, you missed out on doing 3 or 4 other deals in that time frame.
Hmm.
So yeah, I really like that strategy. It sounds to me like you're essentially cherry picking the highest ROI, more like actually highest annualized ROI things. Like what's really quick that can bump up the value. Let's do
Hmm.
only those things, and then boom, we're out. Get
Yeah.
this thing on the market.
And it's coming from hedge fund world where we were looking at 100 properties a day, volume, right? If we can do more volume, even you might make a little bit less, but the more volume makes it bigger in the long run. So always go for the volume play, in my opinion. Obviously, there's going to be
Mm,
certain deals where you hit home runs where you're making 6, 7 figures.
yeah,
That's a different ball game, right? But at this price point, going volume play just makes sense.
yeah,
And then to your point about pulling permits in this municipality, pulling permits even for a front door requires a lot, right? So I'm not even replacing the front door. I'm just painting it, and
it's
just
insane.
because like it's a solid front door, it's really good, but just to pull permits is gonna potentially cost us a couple weeks and speed of money. Speed of money. Let's like turn it over as quick as
Dude,
possible.
I'm gonna laugh if like I follow up with this when you get on the MLS and you're like, yeah, man, the buyer remarks were that they did not like the front door. They
You
hated it.
know, one of the meetings that we had, I can't remember, like 4 or 5 months ago in person with James's group was to do everything, right? I think Nick said it. Nick was like, "Hey, we need to you do everything," and we're going to learn on this one. But I think for the price point, it makes sense to not do the front door. We're going to change the locks. We're going to make it look nice. Don't get me wrong, but um,
Yeah,
something that I keep talking to Katie about, like, hey, we need to do everything on this property. It doesn't have to be perfect, but it needs to be done. It doesn't need high quality. I mean, not perfect, but it doesn't need top at a high end, but it needs to just be touched.
and
So
and correct me if I'm wrong, but basically what you're referring to here is like things that make the project look complete. Like we're gonna swap out all the hardware,
yes.
things of that nature. Like we're going to do the painting everywhere. We're going to swap out the hardware everywhere. That makes the property look cohesive because what people tend to do when they live in a place is they're like, oh, I'm going to renovate some stuff here. I'm going to renovate some stuff here. Let me touch that back bedroom. Let me touch that other bath. And then fast forward 15, 20 years, everything like looks super disorganized.
Hmm.
This room's from the 80s, this room's from the 90s. So like hardware, dude, that costs a couple $100 to do the
Yeah.
whole thing. Or same with light fixtures.
Yeah.
Light fixtures, one, you can install on your own pretty easily for the most
Mhm.
part. There's some exceptions with like weird electrical outlets that are outdated or
Yeah.
boxes, whatever. But it's like, okay, you put in new hardware, new light switch covers, and new light fixtures and new plumbing fixtures. That is actually some of the cheapest stuff that you can do on a reno. And that's what makes it look like, oh, somebody went through and flipped this, because they all match. They're all cohesive. They have a style. Ideally you buy them in bulk. So,
Yeah, and buyers look for reasons not to buy, not to buy. So they're trying to figure out reasons like, hey, I don't like this because X, Y, Z, right? So
yeah,
if we eliminate that as much as possible, it really helps with selling it to that end buyer.
I love that, man. Well, I'm really excited to see you get this thing on the market. And while we wrap up here, I guess for folks that are listening in, there's a lot of people who become agents eventually get interested in the fix and flip space or the investment space. And so for people who are listening in and they're kind of thinking about, man, maybe I'd like to buy a property as a rental or a fix and flip, but I'm not really sure how to do it. I don't know if it's a good fit for me. What would be your piece of advice for them if they're tuned in listening?
To speak with someone that's doing it. You want to learn from whoever's doing it now so you can kind of use their knowledge for your benefit. They've already flipped a couple properties, they've already have a couple rentals. Learn from them and then do it yourself. Kind of follow their lead. It's way easier, and actually it will allow you to move quicker, faster, to move up. Yeah. So that's what I would suggest. Talk to someone that's in the field doing it on the daily basis. There's a lot of stuff on the social medias and whatnot. Be careful what you listen to, is what I would say. Talk to someone who's in the field day in, day out that's doing this, would be the number one advice I would give anybody.
Dude, if you're not careful, you'll be tuned into a show like this on social media and
Yeah, good luck.
buying real estate like crazy.
No, it's all good. You do a great job, Jared. So you're solid, man.
Thank you very much, my friend. Well, it was great to have you on.
Absolutely.
And we're going to peace out and end the live. So thank you guys so much for tuning in.